without triggering taxes. Okay, so that's going to be the main common theme of today is how do we transfer money from point A to point B without having to pay penalties or taxes. That's where the 1035 exchange comes in. Okay, it's always about helping your clients not paying taxes or penalties. Okay, nobody wants to do it. Yes, we have our civic duty. We need to pay taxes, but if we're able to minimize and eliminate taxes, that's going to get your client quite excited. Okay. So, what is a 1035 exchange? It is a introductory tax code. Okay, 1035 exchanges offer a smart way for clients to upgrade their old insurance policies, enhancing retirement planning, improving tax efficiency, and implementing modern protection strategies without incurring immediate tax consequences. Okay, I'm actually going to do a case study so you can see a real 1035 exchange in action, the most recent one that I did, so you can see why we even propose doing a 1035 exchange. Okay. And really what it comes down to is everything gets better over time. And I'm going to show you a policy that was great when it got started, but it didn't modernize with what you could get in 2026. So we did a 1035 exchange. Client is absolutely happy with it. Okay. So think 1035, tax efficiency, IRS code. Clients do not know about it. Okay, remember one thing in the financial service industry, as you start learning more, I fell into this. I felt like my clients already knew what I knew because if I knew it, they should know it, right? So the more you learn, you start thinking everyone else knows what you know. That is not true. Okay, you are the licensed professional learning about 1035s, life insurance, annuities, the stock market, index funds, stocks, bonds. You think everyone knows, they don't. Okay, you're the professional, and the 1035 exchange is a wonderful conversation that a lot of us need to be having a lot more with our clients. And I'm going to show you why we need to be having this conversation. But very simply, it's a tax code in with the IRS. Okay. The importance of policy review. Outdated policies. This is what I run into a lot the most when it comes to a 1035 exchange. Another one, hidden cost. Okay. As technology does improve, fees start getting minimized. Okay. I've looked at policies in the 80s and 90s and even from the early 2000s, high fees on the administrative side because if you think about it, there was a lot of manual labor that went into the industry back in the 80s, 90s, and 2000s. That manual labor, a lot of it has been eliminated because of advanced technology. Okay, so millions of Americans own outdated policies. Also, the hidden cost of old fees versus new fees, cost of insurance, admin, marketing, all this plays into it. Outdated policies is the number one reason why we would do a 1035 exchange. Don't let clients tell you, I already have coverage. Okay, great. One example I like to use with clients too, even yourself. Okay, we all have a smartphone now. What version is your smartphone? There's a reason why your smartphone is within the last 5 to 6 years because it's better than it was 10, 15 years ago. Same exact thing when it comes to a 1035 exchange. The products and strategies today are so much stronger than they were 10, 15, 20 years ago. So if a client tells you I already have coverage, start the conversation of a free audit and let them know that, hey, we could do a strategy called 1035 exchange, penalty free, tax free, where we could put you in a better situation without having to pay additional fees and it doesn't cost you any money. Oh, now they're listening. Okay. So outdated policies is very important and the hidden cost, huge when it comes to policy reviews. Another big thing is check this one out. I love these stats, right? 75% of clients with outdated policies are missing critical living benefits and income efficiency. I'm going to show you exactly on the case study because that was one of the main reasons why we did a 1035 exchange, significantly impacting their financial security and retirement plans. I was one of them. Okay. My first policy that I opened up at the time, it was the best policy the market had to offer. Fast forward, man, the policies today are so much stronger. Okay, so 1035 exchange, open up a new policy, but things get better. And 3 out of 4 policies we do audit on or talking to clients that have existing policies, potentially always a way to make it a better policy where a client's going to be happy. One thing I love about the 1035 exchange as well is the clients understand and they value the annuity, the life insurance because they have it already. Okay, so you don't really have to make a sell and convince somebody the value behind the strategy. You simply have to show them the same strategy that's much better in 2026. Okay, so 3 out of 4 policies outdated, they need help. This is where we come in. We talk about it all the time. The timing of the baby boomers. Then we have the millennials, Generation X. That's over 200 million Americans when you get those three generations put together. Plus, now we have Generation Z, Alpha's coming in. So the conversation of money is so much more natural. People are open to looking, doing audits, exchanging, changing it. Who doesn't want the best of the best, especially when it comes to their money? I use these stats, 75%. Common advisor pitfalls. Okay, yes, the 1035 exchange is amazing, but we are human, so you want to understand some mistakes that we could make when it comes to the 1035, but also be aware of some mistakes that other advisors are making so that you don't make that same mistake. Okay, so what does it come down to? The biggest one is new sales, and I run into this issue many, many times. We're all so busy as advisors looking for new opportunity and new client acquisition. And we spend a lot of time doing meetings, phone calls, emails, text messaging, lunches, dinners to get new clients. But here's the funny thing. Every time we have a contest or every time there's a big event or Angie and I put our face on and say, you know what, we need to focus on production. The first thing we think about is not new clients. It's always we need to have the conversations with people that trust us already. They love us, they're existing clients, and we're ignoring or neglecting existing client assets. And every time I have conversations with existing clients, there's always seems to be a piece of business that they need help with, and they're going to do it with us because they're already existing client. Okay, so the big advisor mistake clients make is they're so focused on new sales, don't forget about your existing market. Okay, there's tons of business in there, potentially harming client relationship and satisfaction. Another one is product first. All too often, advisors meet with clients, they talk strategy, talk about product, they talk about A, B, and C, but they're not really discussing or putting their financial planning hat on. So that could misalign solutions, ultimately failing the core financial decisions. So make sure that you feel like you're a licensed financial professional, that you're not only a insurance agent. Okay, if you feel like you're an insurance agent, then all the conversations you're going to have with your clients are going to be insurance focused only. You're going to miss out on tons of opportunity by being a licensed financial advisor, professional, financial planner that specializes in insurance-based financial planning. The conversation is so much different. Okay, so big mistake advisors make, focusing too much on the new when you have clients that trust you to have existing assets that you could work on. This is where the 1035 exchange could really come in. Okay, so understanding the 1035, right? What is it? Why does it exist? Why is it here for us? What does IRS talk about? What are the rules behind it? Okay, so tax-free transfers. This is the main reason why we do it. Okay, what's great about annuities, what's great about permanent life insurance is it's favorable when it comes to taxes, right? You pay taxes today, you deposit the money, you never pay taxes ever again. Tons of efficiency, but the rules say if I cash out, then I have to pay taxes. Well, I don't want to cash out of my account. I want to exchange it or transfer it to a new account. That's where the 1035 comes in. Okay, we're letting the IRS know we're transferring assets from account A to account B. Okay, it could go from life insurance to life insurance, annuity to annuity, life insurance to annuity. Okay, and because of that, I'm going to do it as a 1035 exchange. So the IRS is going to receive the documentation and they're going to realize, okay, Mario did a 1035 exchange from account A to account B. Because he did it as a 1035 exchange, he's not going to have to pay any penalties or any taxes, which is a big win for me. Okay, so understanding the whole point of the 1035 is to eliminate penalties and eliminate taxes and doing it through the IRS. Okay, you want to make sure you follow the rules, and the IRS allows us to do this. Okay, a mistake you would make is telling your client to cancel the account, put that money in their checking account, then transfer from their checking into the new policy. That's going to set off a tax event. Okay, you want to do it as a 1035 exchange. Okay. What does not qualify? Okay, a lot of times we talk about what qualifies, but it's always good to understand what doesn't qualify. Okay, because you might be thinking, wait a minute here, I did this, I did that. Isn't that a 1035? No, there's rules behind it. Okay, so there's four key ones. Possession. Taking possession of the funds disqualifies a transaction from being considered a 1035 exchange. What is possession? The example I said earlier. I cancel or surrender my policy. I take that check and I deposit it or possess that money in my checking account. Then I take that money and deposit it into a third party. That's not good. Okay, the IRS is not going to consider that 1035. That's not going to qualify. It has to go from company A to company B. That money could never get into my possession. That's where the 1035 does it. Okay, so improper deposits into a bank, that's going to avoid it. Ownership changes, this is a big one too. Okay, I know clients that made this mistake is they want to do a 1035 exchange. They open up the new policy under someone else's ownership that does not qualify for a 1035 exchange. Okay. It has to be the same owner. It has to go from Mario to Mario, Angie to Angie, Brian to Brian, Joe to Joe. Okay. Because if you switch it, then that's going to not qualify as a 1035. And this is the IRS. These are legal rules. Okay. So this is why we help clients. We understand it. We make sure this is what's going to happen. This is what you need to do to make sure it's a 1035 exchange. Okay. What's also great is suitability and underwriting of the new company. They actually help us with the 1035 exchange too. So there's a lot of documentation, there's a lot of support, there's a lot of help. You know, when we do the application, you're letting them know it's a 1035 exchange. The new company will assist you and make sure that everything looks good and that you're not making any mistakes. Okay. A big one we run into a lot is going to be IRA confusion. Okay, IRA transfers are not 1035 exchanges unless it's within an annuity. Okay, so make sure you don't tell your client we're going to do 1035 when we're doing a simple IRA transfer. Lots of different rules when it comes to the IRS. Okay, so 1035 has a special place. If you're unsure if it's a IRA transfer, versus a 1035 exchange, because sometimes it can be both, then work with your mentor, ask your senior advisor. He or she will confirm which route to take. Okay. Never hesitate to ask for help. We're all here to help each other out. We want to make sure that the clients are getting the support that they need. So if you're unsure, make a phone call to the new company. And once again, work with your mentors and your business partners. He or she will be able to help you out. But possession is probably the biggest mistake I see people make when it comes to the 1035 exchange. Big one for us. Okay, how can we identify exchange opportunities? Okay, you should always have your advisor hat on when you're doing audits, when you're looking at statements, when you're talking to people. Can I even offer a better opportunity so that we could even do the 1035 exchange? And you should know what these opportunities are so that when you run into them, you recognize them right away, and then you could do business with that client. Okay, so here's some popular opportunities on the 1035 exchange. When do we do them? Why do we do them? The most popular one is going to be annuities. Okay, all annuities with low caps, off the limit growth potential, and need to be evaluated for replacement. You have to have this conversation with clients that have existing annuities, especially if they're 5 years or older. Why is that? Interest rates. Okay, right now, the interest rates are the highest they've been in the last 25 years here in the United States. So clients that opened up annuities 5 years ago, 7 years ago, 10 years ago, or even longer, at the time, that was the best annuity. Fast forward, interest rates have gone up from 0 to 5%. Annuities are offering bonuses, higher caps, higher lifetime payment percentages, higher guaranteed withdrawal lifetime benefits. They're offering long-term care. So a 2026 annuity completely dominates an annuity from 2020 or before. Okay, that's that iPhone example I was mentioning earlier, right? If you walk into your cell phone provider and say, "Hey, I want the latest iPhone," it's going to look amazing compared to an iPhone of 2020. But at 2020, the iPhone, whatever number it was, that was the best that the market had to offer. Same exact thing in financial services. The market has to offer today better than was offered in the past because of high interest rates. So this is why we recommend doing an audit of your existing annuity. but also your life insurance. Okay, the case study I'm doing is going to be a life insurance case study, and it's going to grab an old policy and restructure it to do a new policy. Okay, so easy way to look at this or have this conversation with clients is use refinancing your mortgage as example. Okay, it's technically not a 1035, but the main reason why people refinance their mortgage is to get a better interest rate. Also, they could do a cash out refi. They could restructure it to a 15-year, 30-year, 5-year arm. As long as it's in the betterment for the client, they could refinance their mortgage, right? Well, we're doing the same thing, but we're doing it with financial planning strategies such as annuities and life insurance, also variable products. Okay, if you sit down with the client and they have a variable annuity, right away you have to look at that variable annuity and you have to do an audit and you have to show them, look, this variable annuity has some great advantages, but it has some trade-offs. Some big trade-offs is you're not going to have a guaranteed floor. Right now, the stock market is at near record highs, if not at record highs. Also, it's the most valued, overvalued stock market in the history of the United States. It's looking a lot like 2020, 2008, 2000, right, where the market crashed. We need to get this variable annuity and we need to 1035 exchange the money within it into a index annuity so that we could get you a bonus, we could protect your assets, we could add a rider, we can do long-term care. Okay. So it always has to be in the betterment of the client and going from variable to indexing. Most clients, if not all of them, you're like, let's go ahead and do it. Okay. Outdated contracts. Another big one, somebody could have got annuity in their 40s and 50s. Well, now they're in their 60s and 70s. When before that old annuity was focused on growth, now the new annuity is focused on income for life. Let's 1035 exchange it, penalty free, tax free into the new annuity. And then, as I mentioned before, missing features. 2026 annuities have so many better features than they did 5 years ago, 10 years ago, or even 20 years ago. So we get 1035 exchange it into the latest and greatest, just like your iPhone, right? Get the latest camera, get the latest chip, get the latest screen. It's better than same exact thing when it comes to financial products. Okay, so understand these five here because this is what we run into a lot, especially when you're doing your discovery with your client. You're asking what they have, what they're looking for, how we could help them. These are the five cores of, yeah, if you have this, we could definitely take a look at it. I'll run some numbers, see if we can make it look better. Awesome, let's go ahead and do it. There's something called a 1035 exchange. You're not going to pay penalties or taxes. We're simply going from one account to the other. I'll help you with the paperwork. This is what we do. Okay. Client's going to love it. All right. Key opening questions, right? Notice I said discovery. You should be asking a lot of questions, especially in the first meeting. Quite difficult to help people if you don't know exactly what they have or what they're looking. So discovery, I would say, is the most important meeting. Everyone is different. Everyone has different desires, different goals. Like for example, I had a client meeting this past Saturday, and their financial plan and their retirement plan is not what I agree with. I wouldn't do it, but it's what they want. So we went ahead and helped them, and we're going to see them again on Saturday, and we're going to help them again. But everyone is different. Just understand that what somebody wants, as long as it's legal and ethical, and their plan is different than yours, it's your job as an advisor to really help them out. Okay, so key opening questions. When was a policy issued? You'd be surprised. Clients don't remember. Think about your own life. Do you remember when you did your life insurance policy? If it was 10 years ago, 15 years ago? Okay. It's great if clients don't remember when they did it or what they have. That's just a wide opening for you as advisors. Say, hey, we got to take a look at this. If you don't know what you have, you did it 10 years ago, you have two children now, your life is completely different. And that's what comes into original purpose. Okay. My first life insurance policy, completely different on why I got my latest life insurance policy. Okay. Understand why somebody did it. Because they might tell you I have life insurance, but the death benefit might be $250,000. At the time, that was good for them. But now they have a new mortgage, they're married, they have a child, they have two child. $250,000 isn't enough coverage for that new family. So the original purpose could be completely different than the new purpose, but they don't want to miss out or lose any cash value or savings or investments within the original. So let's 1035 that into the new purpose. Okay. Retirement picture, it could go from accumulation to income rider. That's a big 1035 exchange. Understanding what they have, why they did it, who did they talk to, Who did you get the policy through is a wonderful question because I'm wondering if they got it through a cousin, a family member. I love hearing me when they tell me, oh, I walked into a store 10 years ago. I was just in a parking lot. That means there's zero relationship with that company and that advisor. Those are good opening questions. Okay. When's the last time you took a look at it? Is it annual? When's the last time you talked to your advisor? You could see that advisor on the statement. I'll show you an actual statement. What's the relationship with this advisor? Do you still live in this state? Because a lot of times people move. Okay. Advisors aren't going to go 100 for 100. People move, they switch states, they switch homes, they lose contact, and they're not going to drive 30 minutes to 45 minutes to go to their old advisor's office, or even worse, they're not going to fly in. So over time, relationships get diminished and they have old accounts, and that's where we could come in and help them out. Okay, that's where the opportunity comes in. Discovery, see what they have, show them a solution, and then present the solution being penalty free, tax free through that 1035 exchange. Okay, so potential risk and pitfalls, right? You're meeting with a client, you like them, they're showing you the numbers, you're doing an audit, you have a solution for them, everything's ready to go, but that doesn't mean it's going to be perfect. Okay, you should also be aware of some risk and some pitfalls that could occur when we do the 1035 exchange. Okay, what are some big ones? First one is understanding the surrender window. Okay, when we start a new policy, you're going to start a new surrender window. Okay. Also, if it is a old policy, maybe it's not that old, they might still be under surrender. So your client has to be aware that, look, we might have to take a little mini surrender hit for the new policy, but the new policy is advantageous. The numbers look better. We'll make up that surrender hit that you're going to take by year three, by year four, because we're thinking 15, 20, 25 years, depending on the client. Okay, so do understand it does restart the surrender. And this one could play a big role when it comes to senior clients because they might want to access all the money within the next 5, 7 years. So you have to let them know, look, this new policy is going to have a 10-year surrender, 7 year, whatever policy that you select. It also resets the surrender when it comes to life insurance too, not only annuities. Okay, so somebody might have an old policy, they out of surrender, they paid the first 10 years, they're feeling good. The new policy is going to put them in a new surrender and they might have additional fees. So always make sure that is advantageous to the client. Okay, losing benefits. Sometimes old policies have benefits that don't exist today. The market matured, it changed a little bit. So if they do the new policy, they're going to lose that old benefit that was locked in. So make sure if your client has old benefit that's really strong that the market doesn't offer today because back then times were different, let them know that, hey, you're going to lose this benefit. However, you're going to gain so many more benefits, right? That saying of take what, one step back or two step back, three steps forward. That happens sometimes with a 1035 exchange. Also, change the bonuses. Okay. People get excited. You let them know, hey, I could get you a 25% bonus. Great. But does that 25% bonus actually put them in a better place? So it's always about putting your client in a better place to do that exchange. Also, when it comes to suitability, okay, the new companies, they're going to make sure that the exchange actually makes sense for the client. A lot of times during the application process, you have to fill out what the new old policy has, what the new policy has, and you have to answer questions on why the 1035 makes sense and why the new policy makes sense for your client. Because there has been times where I looked at old policies and that 1035 exchange didn't make sense. I had to tell the client, look, what you have is great. Keep it. It's locked in. What we can do is if you want additional coverage or if you want to take advantage of what the market has to offer, we simply open up a second policy or a third policy. There is no rule that says somebody can only have one annuity or one life insurance policy. You could have multiple annuities, multiple life insurance policies, as long as it makes sense. I have four life insurance policy because as my life got older and as my income went up and my net worth went up, I just opened up second policy, third policy. Okay. And I'm looking to do a 1035 on my first policy I opened up when I was 27 years old because now the numbers look good. I'm out of surrender. I want to add some long-term care, so I'll probably restructure that policy fairly soon. I have to look at the numbers. Okay, so some red flags to avoid there. All right, so let's do the case study here. All right, so we talked about the power behind the 1035, why do it, but let's look at a actual statement together, why we did it, what made it look good, what the new policy had to offer, and we'll look at some additional paperwork that the 1035 requires. But what's great about the digital age is the application software does help you when it comes to the 1035 exchange. As soon as you hit yes, additional documents will pop up. Okay, so here's a recent one that we did with Angie. Okay, she had an old policy which she opened up way back in the day. Okay, so don't let your business partners or even yourself say, you know what, I want to wait, I want to put more money away into a IUL. Look, I did my first IUL when I was 27 years old. I put away at the time $200 a month because I wanted to take advantage of the strategy. Now, was 200 a month good money back then? Yeah, it was good, but it was $2,400 a year. I knew that $2,400 a year wasn't going to take me to my retirement, but I did it because I realized, wait a minute here, I need to get something started, start building that habit. And then Angie did the same thing too. She opened up when she was 27. At the time, let me get some pens here to help people. Okay, so she did at the time she did 400,000, and that was a pretty good policy. Okay, $400,000 for a 27-year-old with no children. And she started putting money away. So what I also look for here, as you can see, policy date's 2013. So I'm like, okay, Transamerica has a 15-year surrender. So as we go down here, what I'm also looking at is the cash value. Okay, she had $36,000 in there. Awesome. I'm also looking at how it's credited. Okay, so we got global here. I already know it's S&P. It's index. There's a floor. There's a cap. I'll take that. I'm also looking at what's the rate of return here. Okay, 10.27%. Pretty darn good with guaranteed floor. Can't lose money on account. Okay, so everything's here's looking good. But I'm also looking at what is missing. Okay, so right off the bat, what I'm thinking is, okay, what is missing here? I don't see anything with long-term care. So that's gonna be the first one. We got to have the conversation of long-term care. Okay, I don't see on this policy. The second conversation you have is, okay, the 400,000, this was pretty good when you're 27, but your life has changed. Your net worth is higher. Is this still enough death benefit for what you're looking to do? And that question was, no, I need more death benefit. Okay, so we're missing long-term care. Also, we're looking at additional death benefit. Okay. So I like that. So these are two reasons already right off the bat on how we could do a 1035 exchange of this number here into the new policy because the new policies already has one, two things that I like where it makes sense for the client. Okay. So let's see if we can find additional things that could make sense for the client. So looking here, I'm looking at fees, looking at all this. Another thing I had to check is okay, still under surrender. Remember what I talked about. As long as it's in the betterment of the client and they understand that, hey, we might have to take a small hit here so that we could get you long-term care, we get you better credit and get your higher death benefit. As long as the client understands it makes sense, we're okay. So they count as 36,000 at the time, but we're going to surrender our 1035 exchange the 31,000 into the new policy. Okay. The mistake she could have made was, okay, I'm going to get a new policy. Let me cancel this one, move this money into a checking account, then from the checking account, move it to the new policy. That's not a 1035 exchange. If Angie would have done that, the IRS would have came in and the IRS would have charged her taxes on this $31,000. They said, wait a minute, you put in 20,000 to the policy, you cashed out 31,000, you owe us taxes on 11,000. That's going to be your cost basis. Okay. That's not good. Who wants to pay taxes? So instead, we 1035 it into a new policy. IRS stays off you. Okay. Pretty darn good. Okay. So look at this. Another key factor. I'm like, okay, beneficiaries. A lot of times clients don't update their beneficiaries. So let's add that to our list. Okay, let's all tackle it together. Okay. A lot of times they have maybe their wife, they have someone else on there. Okay, so we have LTC, add death benefit beneficiaries. Those three reasons why we could exchange it for a new policy. Okay, I'm also looking at the surrender charges here. Okay, this all looks normal to me. And then I already know just with Transamerica. Okay, good. Let's go back here. Okay, Transamerica only offers these crediting strategies. Okay, that's it. F&G was a new company we did it with. So now I could go back here and we could look at crediting strategies. Okay, because a new company offers more. Okay, so we have one, two, three, four reasons on why that 1035 exchange makes sense for the client. Okay, and then another thing we look at increasing, we could keep that. We could also do, those are the formula reasons. So if I met with a client, okay, and I'm looking at this, and there's another thing that's missing. Notice here, we don't see anything when it comes to LTC. We don't see anything when it comes to what? The critical and chronic. These are very popular things, by the way. Okay. Just talking about these three clients. Okay. So LTC, and then we can even add a fifth of critical and chronic coverage. Can't spell or write with my mouse today, but you guys get the point. Okay. So went ahead and did it, ran new numbers with the new policy. The new policy, what we went ahead and did was we went with F&G, did this from the start. Okay. We did a bigger death benefit. So we did $600,000 death benefit. That's an extra 200,000. Okay. If you do it percentage wise, 200,000 original four, we essentially increased it by 50%, which is awesome. We'll take that. We also added the LTC rider or LTC. That's going to be long-term care. And then we did the chronic critical illness coverage. Okay. Crediting strategy. We did SMP, which Transamerica has, but we also did a unique one, FNG. Okay. So just on this alone, this was the old policy to the new policy. That's the 1035 exchange. Pretty darn good. Okay. So what do we need to do as far as applications and what else works? Okay. So let me pause this and bring this up. Shoot, I had it on my. One second. I thought I had it like a cooking show where I had it on my desktop. I forgot to bring that one over. Let's see.